Hi guys, I think we will be starting the webinars at 7:31 or 2. Just wait for 1 and 2 minutes for everyone to join. Yep. Okay, I think we will be starting right now. So maybe we switch to the my presentation slide. Minhan, can you share our presentation slide? Yep. Okay, so hello everyone. So I'm Jack Lee. I'm from Phillips Security. I'm dealer. Then today, me and Minghan would like to share a gem within the defensive healthcare sectors. So okay, so welcome to the webinars. Today, we would like to talk about the defensive healthcare sector. So in this webinars, we will be talking about how to use a top-down approach to pick a good potential stocks. So you will learn about the healthcare industry and the potentials of the surgical robot market. And also we will be introduce you to the leading company in the industry and talk about its fundamentals and economic mode. Of course, we also covering risk and valuation throughout this webinar. So without further ado, let us start this webinar. Okay. Okay. Before that, I think I would like to introduce we have Phillips Security has launched a MT5 platform which is newly launched. So for people who fund in a deposit of 1,500 and trade 5 buy and have a 5 buy and sell trade, they will get a price that's 50 of CFD trading credits. And also for people who have initial deposit of 5,000 plus a 10 buy or sell trade, they will get a 50 grab gift and 250 CFD trading credits. And also the last one will be if you fund in 30,000 plus you trade 50 buy or sell trades, you will get a airport plus a 850 trading credit. So this is our promotions for our newly launched MT5 lah. So if someone interested about it, you can raise your hand or anything on this, and do feel free to opt into our MT5. Okay. So now we will start our webinars. Okay. Okay, so moving forward. Okay, so on 1st of February 2023, the Federal Reserve of the United States announced rising interest rate by 0.25 percentage points. So bumping the federal fund rate to target range of 4.5% to 4.75%. With the move, the Federal Reserve is rapidly reducing liquidity and increasing interest rate to tamp down high inflations. In this high interest rate environments, almost all of the industry is getting affected directly. The interest rate hike has affected the aggregate demand in the markets and slowed down the economy, which affect a lot of businesses. So there's no exceptions of the US stock market. So moving forward next. In the slide, we can see that S&P 500 has dropped from 4,600 to 4,000 since December 2000 2022. In this case, I think we are in a bear market right now, which caused by high interest rate environments. During this market downturn, it is time for everyone to look for potential stock that has strong fundamental that can survive through this macroeconomics. So is anyone here excited to look for potential stocks? Maybe you can comment below and show me that you are ready to know more about it. And what stock do you looking at? Yeah, maybe you can comment below. So for those who want to comment, maybe you can switch to everyone so that everyone can see. Yep. Okay, so during this environments, a lot of people will ask me question like, is this the time to buy stock right now? Can I still invest in stock markets? What kind of company should I choose? So in this webinar, I would like to share how I pick a good potential stock by using a top-down approach and introduce you to a stock that is worth to add in your watch list in this macroeconomic. So moving forward, so what is a top-down approach? A top-down approach can be helpful in identifying potential investment opportunity based on the macroeconomic environments. So this involves analyzing economic indicators such as GDP growth, inflation rate, and interest rate to gain insights into the overall directions of the economics. So many would think that it's very hard to understand the macroeconomics. So if you are not sure what to look at on our economic indicator, in this case, I'm here to introduce you our Telegram group lah. So we will be discussing all the topic regarding investing. In this group, we will share macroeconomics, technical analysis, fundamental analysis, trading news, and we will have live sections to discuss on a specific topic based on the request of the member every week in the group lah. So you can see the thing we share. Okay. So maybe you can comment below if you are interested to join the group. And my team will share the link for you guys to join. And also we will be uploading the recordings of these webinars and slide in our telegrams. So please stay tuned until the end because we will be giving a special report on ISRG exclusively for people who join the telegrams. So due to the time constraints in these webinars, I would not be able to cover everything that I want to share with you guys. So for those who join the telegram, you will get the my ISRG report that will go deeply on the comparison of financial performance of ISRG and its competitors in the growing robotics assisted surgery markets, and explain what to look at on the financial indicators and what the number really means. So this analysis will provide a valuable information for investors who are interested in the future's prospect of intuitive surgicals and the wider robot assisted surgery industries. So comment. So do comment. I want the report below, and let me see who won the report. And my team will be sharing the Telegram links in the comment sections for you guys. Yep. Okay, so moving forward. So why do we look at the macroeconomics? And why do we look at macro environments? So it is important to note that the macroeconomic would directly affect different kinds of industries and companies. For example, the rising interest rate and tightening monetary policy right now can lead to a slowing down of economic growth and even a recession. In such environments where a recession is likely to happen, most companies will not be performing well. However, there will, of course, still be certain industry that may be performing. Next. So according to the tables from this slide is a table from Franklin Templeton. We can see what industry are well performing during the recessions and expansions. So during a recession, the healthcare and consumer staple industry will have a high return compared with other industries. In this case, let's look at the healthcare industry. The healthcare industry is often considered a defensive stock, meaning that it can be more resilient in a downturn compared to other industries. So in my opinions, the healthcare industry can offer attractive investment opportunities in this macroeconomics. as it is one of the most resilient and less volatile industry during the market recessions. This is because the demands for the healthcare industry would not be affected too much by the economy. One would still need treatments for their illness despite the macroeconomic environments. Besides that, there are several subsectors within healthcare that investor can consider, which include robot-assisted surgeries, biotechnologies, medical device, and healthcare service. So each subsector has its own unique characteristic and risk profiles. So as we know that the healthcare industry is changing immensely to keep up, to improve high quality care by bringing down expenses. The robotic assisted surgeries within the healthcare sector hold massive potential, as it is considered the best treatment alternative for open surgery. Moving forward, the ongoing of rising demands for surgical robot system is anticipated to continue in the future with the implementations of technology innovations and advancement in minimally invasive surgical procedures. Furthermore, US surgical robot market is still considered as a blue ocean, as there are not many players in these industries. So according to the Granville research, the US surgical robot market is predicted to have a compound annual growth rate of 17.9% from 2022 to 2030. So in this case, I think that the robot-assisted surgery market has a very big potentials and would definitely disrupt the traditional ways of doing surgery. So there are some points that cause me to be optimistic about this market. Next. So first, it would be surgical outcome that a surgical robot could bring to the patients. The robot-assisted surgery, especially minimally invasive surgical, has greater surgical outcome compared with traditional surgery. So furthermore, robot system offer surgeon enhanced precision and accuracy during complex surgical procedures, resulting in improved patients' outcomes, reduced complications, and shorter hospital stays. Okay, next. So according to the editor from the Harvard Medical School, so the robotic treated man has shorter length of a hospital stay, and they also report low pain score after surgery. So robot system allow for precise and accurate movement during surgical procedures and lead to reduced complications such as blood loss, infections, and scarring, which will shorten the hospital stay and faster recovery times. So with the growing populations globally, the demand of robot-assisted surgery is also increasing. So robot-assisted surgery device has been developed to help to meet the demand by providing more efficient and effective surgical procedures. As hospital and healthcare provider invest in these systems, they are becoming increasingly accepted and integrated into clinical practice. The advancement in robot technology has made this system more sophisticated and versatile, allowing them to use in a wider range of surgical procedures. So as the technology continue to advance, it is expected that robot system will become even more and more advanced and versatile, and will be used in even more surgical procedures. So the growing demands of these surgicals has driven the developments of more advanced and versatile surgical robot systems, which make that more hospitals and clinics will increase their acceptance and integration into the clinical practice. Okay, so after the discussions of the growth potentials of these industries, let's look at the market leaders in this industry. Intuitive Surgicals Inc., so as known as ISRG. So ISRG is one of the market leaders that specialize in their robotic assisted surgical device and hold the highest market shares in this industry. So it is the pioneers and a global technology leaders in developing, manufacturing, and marketing robotic assisted surgical product. So it has one of the largest economic moat and the best fundamental in the world. ISRG is the first company that has a robot assisted surgery device to be cleared by FDA in the market. So their system, Da Vinci surgical system, is an advanced surgical system that lets surgeons perform minimally invasive surgicals, which significantly benefit the patient. So apart from this, let me share some of the economic mode that ISRG has. First, moving forward, the fundamental of ISRG is very strong. Next, so based on this table, based on this table, we can see that the ISRG has a healthy diversified revenue from selling products and services. The revenues for ISRG is divided equally as 56% of revenues was driven from selling instruments and accessories, and the other 44 was derived from providing systems and service. So in this case, it could effectively diversify the risk of ISRG to generate profit. Providing disposables, accessory systems, and services play a significant role for ISRG to generate profits besides from their core business. So they are acting as a stabilizer for ISRG to generate continued profits from existing customers. The business model of ISRG has a strong and powerful economic ecosystem that enable ISRG to have exponential growth in its revenue. So this is because after the purchase of this device, the customer will need to spend more on buying disposable accessories provided by ISRG. So therefore, ISRG has a very strong and stable source of income that would enable ISRG to survive in the long run, even in a bad economic situations. Okay, moving forward. So next. Minghan, I think wrong slide. Can you go back one more? Okay, wait a minute. Wait a minute, guys. Okay.
Okay, so while we are waiting for Jack, David has a question. So ISRG stock has been dipping steadily in the last month. How is this so? Jack, do you have an answer for this question?
Sorry, wait for a moment. Okay, so actually, ISRG stock has been dipping steadily in last month. So this is because of their financial report that doesn't really match the expectations of the analysts. But in this case, we are looking at the long-term perspective of ISRG. So first, we will look at a fair price first, and we will have the price target of this stock. So later, Minghan will talk about this, and you will get to know more on the ratios and price to get in, so that you got more confidence, even if the stock is dropping. Yep. Later, we'll look at the valuations. Okay, so Minghan, can you go back to a slide? One more. Okay. Yeah, can you? Okay, next slide for this. Presentation slide. Okay, never mind. We just go on. So you can see on the table so revenues of ISRGs in a 10 years time range. So ISRG actually has increased revenues by 12.51% on a 10-year average, and also 16.12% on a 5-year average, and 15.31 in a 3 years average. So actually, ISRG has performed well by increasing its revenue steadily since 2015. So however, in 2020, the revenue of ISRG decreased by 2.68%. The decrease in revenue is due to the decrease in surgical procedures and the shortage of manpower in the manufacturing facilities caused by COVID-19. So the lockdown in major markets across the globe has negatively impacted the supply chain, therefore restricting the manufacturing of a surgical robot in 2020. So I'm sure that the COVID-19 has affected a lot, not only on the businesses of ISRG and also our life. So the robot-assisted surgery market is expected to grow over the year as there's growing demands for automated industries, automated instruments with high accuracy and less human effort for surgical applications after COVID-19. So an increasing trend has been observed in automated instruments adoptions. This may be due to the effect of the COVID-19 pandemic, during which people have become more conscious about life-threatening viral infections and chances of contaminations. Next. So by looking at ISRG profitability ratio, it has a very strong fundamental. So over the past 7 years, ISRG has maintained a minimum of 10% of its revenues on return of asset and return of equity. So based on the return of asset, it shows how efficiently ISRG assets are used to make a profit. So apart from this, the financial health of ISRG is very stable, as ISRG has very little long-term debt, and its debt to asset ratio is about 0.01. So due to its financial health with nearly no debt, it may be viewed as a more attractive and stable investment options in this high interest rate environment. And it is not burdened by interest payments and has more stable financial positions. This could lead to more investment in the company, which could help fuel growth and expansions. So we will be sharing more of the financial metrics on the ISRG report on Telegram and comparing it with a potential competitor. Okay, next. So looking at this graph, we can see that worldwide procedure trends for ISRG is above 10%. So unfortunately, the compound annual growth rate for procedure dropped from 18% to 14% in 2021. So this also caused by the COVID-19, so which ISRG attribute to the pandemic slowing down its growth rate. However, even with this slowdown and the pandemic, in 2022, it's still expected to be around 11% to 15%, which is still above 10%, which I see it as a very strong signal. Even there's COVID, which affect a lot of the demands and the supply chain. So it's worth nothing that while the pandemic may have temporary effect on the ISRG growth rate, so the company long-term prospect can be positive based on the track record of innovations, strong financial performance, and ongoing investment in research and development. So the company is a leading provider of a robot-assisted surgery system and has dominant market position in this field. Moving forward, so by looking at ISRG revenue trends on its 2021 annual report. The revenue of ISRG has been generally positive over past few years, driven by the increasing adoptions of robot-assisted surgery systems. It showed that the revenue has increased from 3.14 billion to 5.71 billion from 2017 to 2021. So in this graph, we can see that a significant portion of ISRG revenue came from recurring source. So as per this table, approximately 75% of revenue in 2021 came from recurring source, such as instruments and accessories sales, service contract, and other recurring revenue stream. This recurring revenue can provide stability to the company financial performance and potentially increase the predictability of its future revenue stream. So moving to the next one. So besides all the fundamental that ISRG has, ISRG actually also have a very strong brand stickiness, as ISRG is trusted and reliable in their Da Vinci surgical systems. And it is first to be cleared by the FDA in US. So there are very few substitutes available in the market for consumer to choose, and ISRG could be one of the best robotic assisted surgery device in the market. So once a customer choose to buy ISRG device, it will be very costly for them to switch to other substitute, as ISRG device are very expensive and sold for over USD 500,000 to 2 million. So it is very complicated, and also it is very complicated and required to spend a great amount of time on trainings to use the Da Vinci system. So customer will need to spend a lot of time and resources to learn and adapt new device once they want to switch to another substitute, as all the procedure for the robotic assisted surgery device might not be the same. So customer would not switch to the other substitute easily after they have Da Vinci systems. Okay, next, ISRG has a wide economic moat, and it is dominated the market by holding nearly 80% of the market shares worldwide. So the industry has a very high barrier to entry that advantage ISRG. Companies need to take a great amount of cost and time to invent and produce a robotic assisted surgery device that is able to compete with ISRG. So ISRG is irreplaceable in the market in the short run, which make ISRG a safe and stable investment. However, there will be still a lot of potential competitors trying to take the market shares from ISRG in the future. There are some competitors in the field, most notably would be Stryker Corporations and Medtronics. So as per mentioned just now, we will be giving a special report on ISRG exclusively for people who join our Telegrams. So in this report, we will be evaluating the financial performance of ISRG and its competitor, and how does ISRG performance compare to its competitor in terms of financial performance. So you can see on the slide, this is the report that we will be giving. Okay, so moving next. Okay, so feel free to join our Telegram, and here's the QR code. So later we will be sharing this again, so don't worry. And the link we will be sharing the link in the comment section, so do feel free to join it lah. Okay, next. So as per mentioned just now, ISRG has around 80% of the market shares. Thus, it makes ISRG a very strong economic moat. However, despite its strong market positions and economic moat, ISRG is still not immune to various risks that investors should be aware of. So some of the major risks faced by ISRG include the increase in competitor, changes in healthcare regulations and high valuation. So one of the major risks of ISRG is high valuation. Next. So as you can see on this slide, the PE ratio for ISRG is more than 60 times, which is 3 times higher than its industry average. So with such a high PE ratio, the price of ISRG could be extremely volatile, and it is under a lot of pressures to maintain its high PE ratios. So this is because to mitigate this risk, ISRG must continue to innovate its products, maintain its leading position in the market, and achieve high revenue growth. So if ISRG fail to meet this expectation, its high PE ratio could become unsustainable and result in a decrease in its shares price. Okay. So furthermore, the rising of competitor would also be one of the risks that an investor has to take into account. So the rising of competitor is trying to grab more market shares from ISRG in the future. So you can see in this slide, Stryker Corporations is the second leading player in the market. So Stryker Corporation is one of the leading medical technology company globally. Okay, so it is well known for neurosurgicals and advanced guidance technologies. After the acquisitions of Macrosurgical Corp in 2013, Strikers has developed surgical system and approved it for use in orthopedic procedures such as total hip and knee replacement. So you can see the machine in the slide. So basically it's this kind of machine. Okay. Okay, next. In addition to the above, so another player that could pose a threat to ISRG's market dominance will be Medtronic. So Medtronic is a leading global medical technology company that provide a wide range of innovations, medical technologies, including the Hugo robot-assisted surgery system that was announced on 15 December 2021. So this system has already enrolled its first patients in the EXPAND URO US clinical trials, and it is expected to receive regulatory approval in Japan in the second quarter of 2023. So this is a significant development as it indicates that the market competition is increasing and that ISRG may face more challenge from its competitors in the future. Okay, so besides that, the change of healthcare regulation would also be a major risk that ISRG is facing. The healthcare industry is heavily regulated, and changes in regulations can have a significant impact on a company operations and financial performance. So for example, change in regulation regarding the approval process for new medical device or change in reimbursement policy could impact the sales and revenue of ISRG. So the stricter the regulations on the use of robotics in surgical could also limit the growth potentials of this company. So the healthcare industry is an industry worth observing and study during this macroeconomic environment. So in the robot-assisted surgery robot market, which has potentials for growth, ISRG actually has a very great fundamentals and products to benefit with revenue potentials amounting to several billion dollars. So although ISRG has a very strong fundamental business model, the stock is still considered as a high-risk investment as it has very high valuations and the share is very volatile. So high valuation may not be sustained as the rise in competitions and uncertainty of the macroeconomic and government healthcare scheme and subsidy. So investors must consider to plan work for them when investing in ISRG. So in short, ISRG is currently the leading player in the market with a dominant market shares but the competitions is starting to increase, such as Stryker corporations and Medtronics. So despite the strong competition advantage and economic moat, ISRG will still be affected by market risk. So factors such as a change in healthcare regulations, increased competitions, and its high valuations can all have an impact on company performance and share price. So as an investor, it is important to consider this potential risk and conduct through research before making investment decision. So ISRG still is expected to remain the leader position in short term. It is but also by looking at the rising of the competition, we need to take into more account and also maintain our risk exposures on ISRG. So moving forward, Ming Han will talk about the valuations and the technical analysis on ISRG. So giving the stage to Ming Han.
Thank you. Thank you, Jack.
Thank you. Thank you.
Thank you, Jack. Okay, so Jack has really done a very in-depth research. I think along the way, there's some questions. So we'll take a look at the questions. There's also a Q&A function. So if we miss your question in the chat, please use the Q&A. So one asked about the annual dividend. And thank you, Hamid, for answering the question. Yes, it's a growth stock. So they are plowing their earnings back into the business so that it will grow further. Mr. E asked about the market share. I believe Jack shared about 80%. And definitely there are threats, but at least in the short run, having an 80% market share. And he also talked about the network effect. When everyone is being trained in using ISRG's machine, is harder to switch. Not a network effect, sorry, a high switching cost. So there is something that contributes to the economic mode. And Hamid also mentioned about Medtronic, yes, and that is something that Jack shared. Jack, Mr. Will actually asked about, is it possible to share the company's registered patent? Do you have the information? If not, we can always go back to Bloomberg and dig some data out for our audience.
For right now, we don't have the relevant information, but we can search this for them.
Sure, no problem. Mr. Ip, so if you are in our Telegram group, right? So we will take note to put this information, if we can find it, in the Telegram group.
But usually the company won't be sharing too much on their patent because of the business regulation and policy, or that they're not sharing too much. Maybe they will just go a very normal basic description on their patents. Yeah.
Okay, thank you, Jack. All right. Okay, guys, so now moving on, right? Just now, Jack shared about the price. He showed the stock analytics function of POEMs. So ISRG stock analytics, the target price by our Phillip Research is 277.47. So this can, all of you have access, because I believe if you are a client, you will have access to it. You'll be able to see the target price that we set. Now that we are aware of the fundamentals, let's look at the valuation. So I'll move through a number of ratios, and then we will see whether ISRG is expensive or cheap. So can I get your participation? Just want to check with you. If PE ratio today for ISRG is 63, and the average is 63. The average for the data on my screen, about 7 years, is 63. Is this expensive or cheap or fair value? Can you please type your answers inside? Fair, expensive, fair, fair. Okay, okay. Thank you, Dave. Thank you, Kelvin. Thank you for your participation. Thank you, Henry. Yes. So just a rule of a rule of thumb, if you are new to these ratios, if my current ratio is lower than the average, people will say that it's undervalued. If my current ratio is above than the average, people will say it's overvalued. So here we say it's fair. So will we buy a stock that is at fair value? For ISRG, we think yes. Why? Because Warren Buffett also said it before, instead of buying companies at cheap prices, we want to buy wonderful companies at fair prices. And is that what the market thinks as well? Later we will look at the charts. So PE ratio, everybody remember that, okay, it's fair, right? Next, we look at the PS ratio. PS ratio is price to sales. So looking at this ratio, can you tell me, is it overvalued, undervalued, or fair? Thank you, Ben. Thank you, Kelvin. Thank you, Dave. Thank you, Victor. Okay, great. We have a very knowledgeable crowd tonight. I'm very happy and very humbled that you guys spend your time with us tonight. So hopefully ISRG can be something that you guys will look at as part of your portfolio if you do not have a healthcare sector stock. Yeah, so when you diversify, hopefully you'll consider adding this to your portfolio. So PS ratio, we know that, oh, it's undervalued. Okay. Okay, this is price to free cash flow ratio. So is it overvalued, fair, or undervalued? Please kindly put your answer in the chat. Thank you. Over, yes. Thank you, John. Thank you, John, for your feedback. Okay, later we will consider this as well. Thank you very much, Serene, Michael, Henry, Jia, Dave, Victor, Ben, Kelvin, Lionel. Thank you very much for your participation. So John made, thank you, Richard. John made a very good point. He says that you should remove year 2020 and 2021 because that is our COVID period where the market is under extreme conditions. Yes, you can do that as well, no problem. So this will give you different perspectives. So now let's move on to the technical analysis part. So I'm going to change my screen. Please let me know if you can see my chart. Please type letter Y so I know that you can see my chart. Thank you, Liwat. Thank you, Mr. Thank you, Jaja. Thank you, Sari. Thank you, Richard. Thank you, Dave. Thank you, Smith. Thank you very much. Thank you, Willie. Okay. So this is the ISRG chart. So let's talk about the ratios first since we were on the ratios. So looking at the PE ratio, all right. The red line is the past 10-year high PE. That means the 10-year PE ratio when it was the 10-year high. And I multiply it by the current earnings, the latest earnings that I can get to give me a value so that I know that 10-year high, where is the price? So looking at this PE, we can see that, oh, the high is at 346.58. But if you look back, right, in history, you realize that there were times that fundamentalists, when they say, oh, it's at the high, okay, I will sell off. There were such times. But most of the time, not really. How often do you see? Maybe in year 2019, year 2021, which is like the extreme time that just now one of our audience said, we did not hit there. We did not hit there. The blue line is the median line. So I take PE, same thing, multiply by the earnings. So that's the median. Or you, if you want, you can use average. For me, I use median on this chart. So you realize that, okay, ignore my shaded part first, but you realize that the median line is about 188.9. So I would say that is my fair value. And the green line is the 10-year low, the PE ratio. So now we remember that, okay, so PE in terms of so-called fair value is at about 189, all right? So now we move on. Just now when talk about price to sales. So looking at price to sales, if fundamentalists seem to be, because sometimes, you know, when you look at growth stock, right? Because when people think growth stock, sometimes they don't look at the PE, they actually look at PS because the revenue keeps growing. So they value based on that. So you can see that seems like the market respects the 10-year high. When every time reach the 10-year high, it will come down a bit. And what is the median? The median is very high. In my opinion, it's like $256. That's the median. So look at the market conditions right now. It's down. We are defensive. So if I let you choose 190 or 245, which one will you choose? 190 or 245? At the end of the day, right, price is what you pay. So let me ask you, do you want 190 if I sell you the stock at 190, or do you want to pay 256? 190. Victor says 190. Thank you, Michael. Thank you, Jack. Jack, very greedy, want to go 120. Thank you, Dave. Thank you, Serene. Yeah, so a lot of us we want to wait for a better price. And if it's at 256, if you look at his historical, right, most of the time it's above it's above the blue line. So from a price trader investor perspective, personally, I will go for 190. All right, so let's look at price to free cash flow, and maybe we have more clarity. Because looking at these three ratios, sure got some fundamentalists use one of the ratios. So I want to have a bird's eye view. I want to see, oh, which ones are they using? So looking at the price to free cash flow, right, you realize that, oh, it's around 120. I think that is also one reason why Jack asked for 120. Maybe because Jack look at the free cash flow, he thinks that, wow, 180. So why did I shade this 190 area? Because if I look at the history, I wonder how many times, right, it touches the fair price to free cash flow. So if you look at this, very few. So realistically, I will be looking at the PE as a gauge. So far, so good when we are talking about ratios. If so far, so good, can you please type for me, so far, so good, so that I know that I'm going at the right pace and I can move on with the technical aspect of this stock. Thank you very much. Thank you, guys. SFSG, you guys know our pattern already, right? Don't want to type, just type short form, SFSG. Thank you very much. Really appreciate your time tonight. Okay, so John has a question. Where do you get these indicators? You can search for it on TradingView. Yeah, so I coded this personally myself because I use it for myself. Yeah. Okay, thank you very much, guys. Okay, let's move on to a technical part of things, and then we will see why we are looking at 190. This is all the chart data I have is a monthly chart, but because it's a monthly chart, I want to look at the log scale. The log scale to have a percentage to take a look at the price. So you realize that for my trend lines, the monthly prices respect the trend lines, and that's why I drew these trend lines. Okay, so these are the trend lines. So now I zoom in, keeping in mind that my log scale is still on, because I want to know for the short term, where are we? So if you look at this, right, if price come down, it will come down to the trend line. So from a technical aspect, it makes sense to me. And from a fundamental, it also makes sense to me. So this is how I merge my FA and TA together. So now I remove the log so that I don't need the pink color line now. And after which, I draw the trend lines. So you realize that I draw all these trend lines. Okay, sorry. Okay, so now I draw these trend lines. this is my resistance and support. It came down, found support, couldn't hold, came down, touch it again, resist, go down again, come up, resist again. So this is what I'm looking at. So this is my weekly support and resistance. So if you see, if I zoom out further, weekly chart, touch, come down, try to break, cannot, come down, try to break again, successfully come back down, support. So this is my weekly trend line. Weekly trend line, I put it in purple. Daily trend line, daily support line, I put it in red for myself to see better. Yeah, because I give more weightage to the higher time frame. So you realize that, oh, this is also, coincidentally, it is also the weekly trend line. And coincidentally, it aligns with our FA side of things. So this is what I personally think is a fair value to look at for ISRG between 186 to 200 thereabouts. So so far so good. All right. Okay, so now moving on. So this is a summary. We know just now we say that it's undervalue, undervalue, overvalue, fair value, undervalue, overvalue. So from these three ratios, it's a little bit mixed. But from the technical analysis, it gives us a perspective that, okay, this 190 will be something that we'll be looking at. And of course, if you're in our Telegram group, maybe we can do a review in a month or two. Yeah. Once again, if you are still not in our Telegram group, we actually share about stock analysis. We share the market insights. We also share whatever topic you want us to share with regards to FATA. And Jack has done a more in-depth analysis with ISRG and his peers. So do join us. This is a sample of his report. And I'll leave my contacts here. So if you are still not a HQ client, right, please join us. We love to have clients like you because you spend time with us. We know that you are a keen learner. We really hope that this is a group of our dream clients. We really hope that you will be our client. So I have my account opening link above and my Telegram. Oh, yeah, my Telegram channel below. All right. So yeah, so thank you for your time. I will stay around for more questions if you have. Yeah, Jack will also be around here. If you have more questions, you can ask him as well.
So we will be posting the report later on around, I think 9 to 9:30 like that. So if anyone who want it, just join before that lah. Okay, to get the report. Yep.
Yes, John. Thank you, John. Jack, can you answer Mr. Liu's question?
Yeah. For the 80% of market share is worldwide. So it's 80% of worldwide. It's not US alone. But I think a few week time actually had dropped until like 70 something. But approximately is 80%. Yeah. Any more question, guys?
Thanks, Dave.
The number 2 player is striker. The striker actually have a market share of
Thanks, Ben.
around 15%. Around 15% of the market shares. Basically now this industry have not much of a player inside lah, because of the technology advancement have to be very good and the barrier to entry is very high. Yep.
Thanks, Mr. Liu. Thank you. Thanks, Aja. Rest well. Thanks, Mr. Lim. Thanks, Mr. Ip. Thank you. Thanks, Victor. Thanks, Willie. Thanks, May. Thanks, Mr. Yi. Thank you. Thank you, Serene. Thank you, Mr. Yo. Thanks, Victor. Thanks, Hamid. Thank you. Thanks, YD. Thank you, Henry. 那个 Richard，
What is SSNM?
谢谢你们。
Oh, okay. Nice short form.
Thank you, Kim. Sherman, you can share your screen now. Thank you, Puma. We'll be around for a while if there's any questions. Sherman, you can just share your screen.